Ladies and gentlemen, welcome back to the channel. Some pretty insane things happened on Friday that need to be discussed a lot more, and this could potentially make this upcoming week that much more exciting and potentially volatile. Now, if you guys are unaware, AMC has their March 14th vote on March 14th, essentially going to confirm or deny AMC Entertainment's ability to do a 1-for-10 reverse stock split to authorize 25 million additional more shares, as well as some smaller initiatives. Well, I think we're all on the same page by now. Nothing's going to happen this upcoming week as far as what we're voting on, right? But you are going to see a lot of money essentially be moved around, and a lot of people have been trading AMC with this arbitrage trade really for a short-term gain. A lot of people are not taking out shares of AMC, selling them short with 100 to 500 and 900% cost bar rates like what we've seen over the past couple of weeks. So this upcoming week, you're really going to have to see a lot of rolling over or potentially shorts covering on their short positions. Now, at the same time, March 14th, you also get inflation data that does come out, and this is going to move the probability of that 25 or 50 basis point rate hike. And a lot of people are starting to say that this SVB failure, the Silicon Bank that essentially just went bust in 48 hours, fun fact, the second biggest bank collapse in U.S. history, SVB Bank, it is going to cause a lot of contagion. And you're already seeing this with Roku announcing that 26% of their cash essentially was with SVB Bank, and they might not get that back. So it's putting the Fed in a really bad position. Ultimately, I think this could lead to forced share recalls. I think this could lead to banks really tightening down on their liquidity standards and really lending standards, and cause more bullishness within the riskiest assets in the stock market. We're not talking about even your Teslas, or definitely not your Apples, right? Your Microsofts. We're talking about those short squeeze kind of trades, these arbitrage trades that are not home runs, right? AMC is probably the riskiest stock in the whole entire stock market if you are short on this, right? Even if you're long on it to a certain extent, you just don't know what can happen. There's a lot of uncertainty, especially around this March 14th vote in particular. So when there's that much volatility and banks are going bankrupt, you can very easily see forced share recalls. And we're going to touch on that a little bit more here in this video. But nonetheless, we kind of give you guys a recap. What happened on Friday is SVB did officially go bankrupt. This happened in 48 hours. The officials, right, the FDIC, a lot of other officials, the SEC, they basically showed up at the bank's front door before they opened today and said, we need to go through essentially where you guys are at. What do your financials look like? Are you a contagion risk? And they deemed that they in fact were, that they did not have the capital necessary to remain in business, and they took that FDIC insured capital from SVB and put it in separate accounts. This literally happened like overnight. It was the quickest bank failure, obviously, we've ever seen in history. Even Lehman Brothers took months, right? This took less than 2 days, right? Less than 48 hours. So you are starting to see some of the fallout effects, and I don't think this story is anywhere close to being over. After all you've seen today on Friday, just depending when you guys are watching this video, I'm making this video later at night, so technically, right, it is Saturday when I'm filming this video. So if I refer to today, it's my overall mindset is still on Friday. Nonetheless, First Republic Bank alone dropped about 51% intraday on Friday. You obviously closed down about 23%-ish, and that's another large regional bank. And the more that you're going to see this fear, the more it could potentially lead into companies like Goldman Sachs, or that's one you really want to watch for is Goldman Sachs, because they are an investment bank as well as some other guys. And this could put a lot of pressure on some of those short positions within AMC because, again, they are some of the riskiest positions in the whole entire stock market, especially since AMC is now having to go to court and is now getting essentially sued because of this March 14th vote that they are proposing. So it's not like this is a home run. There's a very good chance of seeing a short squeeze here, and really better than a 50% chance, in my personal opinion. You're probably looking at a 60 to 70% chance of actually seeing a short squeeze after March 14th. Now, this all comes down to the large amount of capital that was in play for this week that was betting on March 14th being a very red day for AMC, essentially that this vote was going to happen. Subsequent days following, you would get this reverse stock split, and this arbitrage trade would come to life, and you would essentially make a whole bunch of money, right? Shorting AMC, going long on APE. Well, now, if you have researched anything about this court date coming on April 27th, this is the farthest thing from a home run for AMC. There's a very real litigation that Adam Aron and AMC Entertainment essentially diluted AMC stockholders' voting power by having these APE shares and doing such a large deal with Intera Capital. It's like rigging an election, right? That's the best way you could put it. They rigged the election or the vote, right, with this whole thing, this 10-for-1 stock split. You literally don't have a say. Like, you technically have a say, but when Intera Capital owns almost 40% of the votes, to pass this proposal, you only need like 11-ish% to get this done, and other hedge funds that are long in AMC are doing this arbitrage trade. They're obviously going to vote for a yes. So there's really no chance in the world that this comes back as a no. If it does, something is wrong. Intera Capital backed out of their deal. Maybe they see some of the same things that we are seeing. Maybe they think the risk to reward, the trade just doesn't look good anymore. But about 99% chance it's going to be a yes on March 14th. Now, it's probably already priced into the markets, and probably you actually get a rally off of that because, like I said, the actual court litigations are hard to deny. It's hard to deny that AMC Entertainment did not rig this voting process. So coming on April 27th, you're not going to get a resolution. It's going to get kicked down the line, and you can see when the first court date is, it's a month and 2 or 3 weeks out from the day that they filed this lawsuit against AMC. It's going to be another month and a half, 2 months before the next court date, and then it's probably going to be a couple more before anything was set in stone. And I think odds are, believe it or not, usually companies don't get sued and the plaintiff actually wins. Usually the company's going to win, right? I actually think there's a very strong chance that Allegheny County Pension Fund and other hedge funds that are suing AMC are actually going to win this. And we're not going to know for a while. Maybe we'll know April 27th. There's a chance of that, but it's probably going to take some more court proceedings. So long story short, there's a lot of capital tied up for this March 14th vote, and specifically for this March 17th option expiration that is insanely large. Essentially, the hedge funds have been hedging some of these trades with their option activity, or naked shorting the stock, hedging some of their trades, or just overall going balls to the wall in some of these options trades, right? The option activity is at the highest level that you have ever seen within AMC. So coming by March 17th, you're going to have to see some capital move around, and it's not going to go the way that the hedge funds want it to. It's not a home run trade anymore like they initially thought it was. So when you are offsides so wrong like that, just flat out they were wrong, that means that you're probably going to get the adverse reaction. You're probably going to get a bullish reaction. We've all been around the markets for a while now. I'm going to assume you guys have been in the markets for a year or two at least. I've been in the markets, what, like 5-6 years now. Seen this happen multiple times. And whenever you have a lot of people betting on one thing happening and it does not happen, the opposite happens, you see an opposite reaction exponentially. Meaning that if everyone expected AMC to fall after March 14th because this was a home run trade, that probably means it's going to short squeeze to all living hell oblivion, going to screw the shorts a new booty hole coming after March 14th. And now with the litigations, is it going to be April 27th? Is it going to be in August? Is it going to be in September or October? That's the hard part. You never actually know when this will be realized by the markets that it's not going to ultimately happen. So to put it in simplest terms, I don't expect big downside this week. Now, if you do get downside this week, it's probably due to the inflation report that does come out, because after all, AMC has fallen quite a bit over the last couple of days. So any potential bad news is probably already priced into AMC, and I think that's a very fair assumption. If you take a look at the actual chart here, it's fallen quite dramatically over the last couple of days. Still not in like a bearish downtrend, but it's not in a really bullish uptrend at the same time. You have really, from the peak that you've seen over here on February 28th, you've fallen about 36.5%, 37% from the peak to where we are currently at ever since February 28th. So it really hasn't been that long that you were much higher than where we are now. So when you put all of these things together and just basic market concepts and market knowledge, pretty clear to see, from my personal opinion, that you're probably going to get a substantial rally. After all, ever since this vote was announced for March 14th, you have seen the short interest go from about 19% to over 25%, and that's the legal short interest, not to mention the FTDs, the failure to delivers that have been happening with AMC, even to the extent that Adam Aron is calling on the New York Stock Exchange as well as FINRA to investigate potential naked short selling of AMC. Add all this together and it looks to be pretty green for the retail investors, not to mention ever since about February 21st, AMC has been in a bullish uptrend, breaking out from that long-term bearish downtrend that we have seen ever since the June rally. Pretty clear to see right here, getting rejected at this line. Every single time you have seen really a short squeeze or a gamma squeeze, whatever you want to call it, with AMC, where the price went up 100 to 300%. That would be in what? End of March 2022 and August of 2022, as well as to a lesser extent November of 2022. You always got rejected at this line. Well, now a little bit different. You're above that. You are in a bullish uptrend. You have since went through a bottoming process, guys. So trying to make 1 and 1 add up and make 2 for you guys, it's pretty clear to see, at least from my perspective. Probably going to see a lot of green in this upcoming week, guys. So that is only the tip of the iceberg of the information that we have to go over and discuss to get you guys ready for everything for next week. Hit the like button, subscribe to the channel, and turn on that notification bell if you guys want to stay up to date with all of this information that will make you money. That is it. Thank you for watching, and I will see you in the next one.